Hey, what's up? Trader Tim from EminiMind. Going to talk about 1 minute trades today. Today's Thursday, and I wanted to run through. Actually, kind of went to town on 1 minute trades, so I wanted to run through those today. The first thing I noticed coming into the day was another pretty tight range, and this week has been kind of a weird week with lots of small ranges. So the range on the open this morning was really, like this, and then you had this one inverted hammer that stuck above the top, and that was right at the top of the hour. And so felt like that was a good short because it was poking above the high. And look where we paused or reversed, I guess, was from this. This is an unfilled gap from way back here on the 16th of February. I'm sorry, the 17th of February. Made it right to that unfilled gap. So it's helpful to keep those unfilled gaps on the chart. If you're in toss, just make another drawing set, and then you can keep those on there so that when we come up to them, you can be ready to watch for signs of reversal. And an inverted hammer is a great sign for a reversal. So that was a nice short below that candle. It looks like a big candle, but it's only 3¼ points. So that's what I mean. The ranges this week have been really, really tiny. The 15-minute breakouts haven't really gotten any follow through this week, but those ranges have been small as well, 5 and 6 points, which is pretty small. But anyways, this one broke below that inverted hammer and then trailed all the way down to what was at that point the low of the day. It made a new low. From there, one of the reasons I kind of went to town on the 1 minute chart today is because I really didn't see a whole lot on the retracements this week. Tuesday, we had a little bit of a little micro long at highs, and it was a decent day, but really didn't have a lot of opportunities. So saw a lot more opportunities on the 1 minute chart. And today was a really good example of that. I ended up reversing this trade, so shorted underneath the low of the high bar, and I actually went long just above the high of the low bar down here. That one, I was able to tighten my stop up to here, but then that took me out. Notice how it's right at the bottom. This gray line is the 30-minute low, and then the gray line up here is the 30-minute high. So that was, I was looking at that as a support level, and for us to come back into the 30-minute range and maybe go back up to highs. We didn't, we broke below, but look how quickly I was able to tighten my stop from down below that candle to that next candle. For any of you that, if you're new or if the trade recaps are going quickly for you, if you're on YouTube, you can go to the bottom right in the settings wheel and just click that, and you can drop the speed of the video down to like half speed, and then that will slow it down so you can get it a little bit slower. Otherwise, if you want to speed it up, you can do that too. The next one was 717, and notice none of these ticks. Sorry for the plane taking off outside. None of these high and lows of the day had extreme low ticks. So the nicey ticks actually did not line up with the highs and lows, but the tails were poking into new high, into new low. And so I've been experimenting or being a little bit more aggressive with some of those, I guess taking more trades just because I'm able to get my stop tightened so quickly. So that's why a couple of these, or most of these today, really don't want, like there wasn't a high tick at the top of the hour. But the next one was 717, and this was a little hammer down at lows. We kind of made this little bear flag, and then the breath wasn't super negative at the time, and so I felt like, oh, we could move back up to what would have been that next halfway back, or for the day, halfway back short, which would have kind of lined up near the bottom of the 30-minute range. And this also ended up ripping. This was a nice one. It ripped 10 points. And this one, just above the high of this hammer, the high of the low bar, getting long, and then trailing each candle on the way up. And then you'll notice as you get up here, so the stop at this point is one tick below, so 76, and so then subtract a tick, 40, 75, 75. This candle is inside. Its high and low is inside the bar before it. So just leave your stop alone. It really wouldn't have mattered, but I like to leave my stop down here, 40, 75, 75. And that will keep you in the trade if you get a little bit more consolidation, like here. So this guy had a little inside bar. At that point, my stop was here at 40.7650. And so if you keep your stop below, right there, 40.7650, when this green candle pokes below the inside bar, you're still in the trade. And that happens a lot. So it's really important to leave your stop below that kind of candle that made a higher high or broke above the prior or couple bars prior, made a new high. And so trail to stop there, trail to here, and then this candle is where it finally took me out. So that was a nice 10-point run. And then we had actually came up and broke the 50% retracement short, and we were back into the 30-minute range. So I was kind of getting ready to just shut down at that point. But then we had this little inverted hammer up here, and the high I liked that kind of the body was kind of like right at the prior high, not including this tail from up here. So I figured, well, it had been a good day so far, and so I ended up taking this as a short. This one traded really fast. I ended up getting a tick lower than the price, so the low was 84 and a quarter. It should have been 84, but I ended up dropping my order at 83.75. So, if it's a tick or two off, not a big deal. The idea is you just get in as fast as you can. And then this one dropped pretty quickly because you're getting in with the momentum, and that's why it's a really good trade setup, because immediately, boom, with the momentum going your direction, you can tighten your stop within within a minute. A lot of times it's sooner than that, and then boom, you get into profitable territory right in the next candle. And so this one traded down to the bottom of the 30-minute range, and this was another one where I doubled it up, or reversed, I guess you would say, where I exited above this spinning top candle. And this was beautiful, right at the bottom of the 30-minute range, right at the 50% retracement. That was a no-brainer there. And so I exited the short, and then just put another order on top of it. And then as I was exiting the short, it got me into the long. And this one only went like 2.5 points or so. Let's see, 40, 36, yeah. So it went from here up to the low of this little candle here. I was kind of hoping it would go back to the top of the 30-minute range at least, and maybe break us into new highs. But great setup, reversal bar at the 50%, bottom of the 30-minute range, and so that was a nice one, and trailing a stop again. So ended up, being a really nice day for the 1 minutes, and a lot of movement on the 512, but just not the greatest week for adhering right at the 50. See how we break through the 61.8 and then we still roll over and go south? You get those kind of weeks every once in a while, and rather than sit there and force retracement trades, it's nice to have, another option of something you can be doing, looking for trades while the retracements might be having an off week, and that's totally fine. I'm not really concerned with things breaking down or anything like that. It's just you go through periods where the market is consolidating and periods where the market is trending. And when you're range bound, like for the most part we've been today and yesterday, and even back here on the 27th, let's see, that was a Monday. Monday. So you have other opportunities to trade on range-bound days in a slightly different way. You're looking for a lot of the same setups, but maybe you're looking for them at slightly different areas. So on a range-bound day, looking to sell highs, buy lows, and then on a trending day, you get more of those halfway backs in succession, one after another after another. So that was my day today. Let's see, tomorrow. We'll close out the week. I probably won't be as aggressive with 5-6 trades. That's usually about the most I'll take in a day. But one thing, close out here, we are up above the 61.8 on the ES up here, but on the SPY, we are right at the 61.8. So if you do want to put on, today at the close would be a good day if you're looking to put on a hedge, because you can put on the puts, something around like 403 or 400 even if they're a lot cheaper, but something close to at the money. You've got this prior high back here, and so if you put on puts at the close and then tomorrow we gap up, you can just dump them at the open for a super small loss. If we rally tomorrow and close above the 61.8, then you can also dump them for a small loss. And if we get some sideways movement and we hold this 61.8 and start to roll over, then there might be an opportunity to catch like a 403 back down to this 383 if we can kind of fall down, or at the very least like a 392. You saw that this week where we had some retracements that come up. They break this little swing high, but they don't make it all the way to the negative 23. Usually, those don't trade at the next 50% like this. If you draw the 50% retracement, you're probably not going to get a bounce at 397. And so you have a better chance of getting a move down to retest this 392. So that would be an opportunity for like a hedge or a swing trade or something like that. And look at the volume here, declining volume on the move up. So that makes another good case for kind of a rollover here. So been a little bit of an odd week, but looking for the same setups and same kind of trades nonetheless. So hope you have a great rest of your week, and I'll talk to you soon.